Good morning, all you crypto trading brothers and sisters. Today is Monday, June 20th. It's really the Juneteenth federal holiday. So markets currently are not open. U.S. stock markets, that is. Of course, the crypto markets are always open. So today we're going to discuss the price level of 18,415. Was that our bottom? And you can see I call that a support. I'm going to show you why I call that a support. In fact, on Saturday, I was going to put out a special video just showing why 18,415 was so critical and why I might be under the impression that it is a bottom, at least temporarily. Of course, the longer charts are much more bearish and do show us going further down. But we have had 12 straight weeks, a new record in the crypto markets on the Bitcoin chart. 12 straight weeks of red candles, now below the 200-week moving average, and really never confirmed any kind of significant move below the 200-week moving average like we are today. So it would be a continuance of making history if we do. All right. The other thing I want to talk about is whether it's time to start DCAing in, and why I have decided to start trading in USDC/BTC pairs only. No more tether for me. I'm just going to, as long as I'm in the practice of minimizing my risk, publicly at least, I'm putting all my stops. I will also make sure that I'm only trading in USDC or BTC pairs. Now that's going to minimize the cryptos that I trade, but as I've noticed, most of the cryptos that are worth their weight in gold do trade in one of these two pairs. Everything else, it might pump a lot, and yeah, you could miss some of those pumps by trading with me. This is true. I will still put out a list of coins, even if they are tied to the tether pair only, and you can choose to trade those if you want. I really just don't want to be a part of tether for the next few months. Not only because what I'm seeing on the charts indicating we have further down, and has to be an event to get us there. Definitely a tether audit, in my opinion, might do that. Okay, we're 3 minutes in. I've got to keep cooking here. We're going to start with the dollar. You can see target has been reached. This purple line is my target up. That target has been reached. So this is the dollar chart. No, this is Bitcoin dominance. Why am I on Bitcoin dominance? I meant to be on the dollar. Yeah, so dollar target has not been reached yet, but Bitcoin dominance target has been reached. And look at this big fall since that time, guys. I mean, again, Bitcoin dominance has really fallen, and in my opinion, I think it will continue to fall at least a bit. All right, now Bitcoin is the lead dog, so it should remain relatively dominant overall. It's not just going to go to zero. What am I doing here? But yeah, that was our cup and handle pattern. We measured that target, reached that target, done. All right, so now what it might do, in my opinion, since we're on the chart, is a little bit of this. We'll see. I mean, it's really anybody's guess. I have to wait for a new pattern to establish itself before I can make any kind of educated guess. I wanted to start at the top here with the dollar because this dollar is still in business here. And you can see, just like I said last time, not going to keep repeating, this is a bull flag. All right, I think we're going to go up and hit our heads on that descending black line, which has not been touched since for 21 years. Okay, VIX closed today. We don't know, but this is to me looking like a bull flag right here. And I do think that we will continue up and hit our heads on this resistance here. All right. So with fear up, markets have some ways to come down further, and that includes crypto markets. Silver and gold, I talked about these W flags, so I'm just going to briefly touch on it. Again, that could be the formation of a W. You see the same thing on gold, which is inside of a larger handle. I drew this larger cup and handle pattern several months ago, and that shoots us to $3,000. So if that W pattern plays out, that should take us to the neckline. If we break that neckline, we go up further. What does this mean for us? Further fear, uncertainty, and doubt is in the cards, guys. Or maybe it could also mean, as I've been stating, a pause on rate hikes. I do think it's in the cards that, you know, we're starting to, the Grim Reaper is starting to knock on the housing market doors right now. We're seeing lots of very bad signs in the housing economy indicating what will come. Like we're talking 2008 type of housing market crisis if it's not saved by the Fed, and the Fed is the only one that can save it by pausing rate hikes. If they decide to do that, then the housing market can continue being the stronghold in the U.S. economy because we don't make anything anymore. And so the housing market is the only illusion of economy that we have in the U.S. We're basically screwed. Sorry to be so negative, but that is the truth. I just read a statistic about how the U.S. imports twice as much food as China. And what is China? It's like 6-8 times as big as the U.S. population. Some crazy number. But we are the ones importing food. That's trouble, guys. Maybe now would be a good time to give a quick shout out to my buddy Shawn who sells beef for an average cost of $4 per pound. And guys, this is grass-fed beef off of the Mississippi River. You're getting all that good mineral content that those beef are eating from the grasses there. You're getting premium steaks, premium sirloin, T-bone. You get brisket. Everything, the average cost of the whole cow is $4 a pound, and this is grade A Angus heritage steak. Give Shawn a call at 563-380-1593. So yes, things are not looking very bright in the U.S. economy right now, and so the housing market is something that definitely needs to be saved. Now, another bright sign that I'm seeing here is I'm going to jump through some of these charts that we don't often cover, oil being one of them. And look at oil here. If I zoom into the daily, you can see somewhat of a ascending wedge. All right, right here. Something like this, all right? It's not perfect, doesn't have to be. All right, but it's showing us an ascending wedge, which is a bearish sign. What we are really waiting for, you know, the last thing to roll over, if oil goes down in price, that is a good thing for the U.S. economy, all right? And it looks like oil is starting to roll over. Could this be the beginning sign of a at least temporary, you know, shorter term to mid-term up movement in the U.S. markets, including crypto? That remains to be seen, but it's something we have to consider. The additional charts I've been looking at, NASDAQ 100 stocks above the 200-day moving average. We have capitulated, guys. We have come down to the 7.55% tag, you know, actually came wick down below it, and the body is sitting right on that right now. And every time we have done that in historical past, excluding 2008, where we came all the way down to 1%. And look at this. This is looking a lot like 2008. Guys, look at this wick down. Almost came down to that 1% right there. All right, so we can really compare this sentiment, this bias, the things that are happening a lot to 2008. We're right on the brink of a housing crisis as well. If the Fed chooses to continue raising interest rates, there will be problems with the housing market in the U.S. It's our last stronghold. So we have to keep that. We have to keep cognizant of that and factor that into our equation. All right, and then I have some other charts here. Some of these are not loading because the market is not open today. S&P 500 stocks above 200. That's a good one to look at. We have percent of stocks above the 200-day moving average. Much the same, guys. Over here I have 2008. Oops, didn't mean to move that. Right over here, 2008. All right, and look at us over here. A lot higher right now. This was October March of 2020. All right, so we have room below us, is what I'm saying, but we are also hitting valid supports. Okay, what else do I have here? Oh, this is a good one. Euro-dollar futures. Okay, this is really an indication. I'm going to zoom out to the weekly here, put it in auto so you can see the full scope. I want to show you something. This is an indication. This is basically the prediction of what the Fed is going to do. All right. So when the charts, when the prices on this chart go down, that is anticipating Fed rate hike action. All right. When the prices on this chart go up, that is anticipating Fed rate hike or rate lowering, quantitative easing. All right, Fed action. All right, so every time the Fed pumps money into, so this chart, if we had another graph, is always a little bit ahead. I could compare it. I'm not going to do that because I don't have time to set this up right now. But this graph is a little bit ahead of what the stock markets will do. Now, one thing I see here, though, and this is interesting to think about. I'm just going to delete these areas or these arrows real quick. All right, is we have broken below this line. All right, now every time we have touched this line in the past, all right, this is 2008 right here, and look how much ahead. So this is 2007 is when this chart started going up, expecting that quantitative easing that is notorious for the 2008 bailout. All right, so you can see just in the date here how much ahead this chart is. Now over here, we have some serious collapse below this trend line, which has only really collapsed below it. We can go all the way back to 1982, but that data is new, so I would exclude that, and I would exclude this right here. Right here, this was in 1989. All right, big date. February of 2000, .com bubble. All right, housing market crisis. This is in January of 19. All right, so before COVID, March of 2020. See how much ahead this is? So look at this. Expecting further rate hikes and expecting serious rate hikes. And that's why we have collapse below this line. Now, will this play out? Like this is an extended candle. That price, when you see those type of candles, they usually collapse on themselves. So I'm thinking, guys, that this is overreaction. I'm thinking, guys, that the Fed again is going to pause those rate hikes, and then we come up and hit our heads on the underside of that long. I mean, this is the lifespan of this euro-dollar futures chart. So very interesting and something we have to keep our eyes on as well. Okay, let's get real quickly because I only have 5 minutes left. Talked about Bitcoin dominance already, so I'm just going to skip to this 18,415 number that I put as support. I was going to do a separate video, as you know, and I I don't know. I'm kind of sick of the markets right now. They're just kind of pissing me off. So I just didn't feel like it. I just wanted to enjoy my weekend, my holiday weekend. And so, anyways, we have a gap up here from the 11th of December to the 14th of December. I saw that gap and I thought, well, this gap has not been filled yet. I don't see any other gaps below us. I don't see anything way down at 10,000. And so, guys, this is a very strong support. And I'm not saying we won't go lower, but it's something that we have to consider as traders, that we may, and once the market opens tomorrow, maybe it drops down to that level and tags it. But I drew 18,415 in as a price on my Bitcoin chart. And look at this, guys. It's right here. See the arrow pointing to it? We smacked it exactly. I mean, just the wick down came just a little bit below it. And so then I was prepared to go long. I just didn't feel like trading. I'm not in the mood right now, really. But I want us to consider that this is a strong possibility of a at least short to midterm bottom. Now, you guys already know from my last video what I think on the longer term could play out. I'm not saying it will, but I want us to consider that this could be a short to midterm bottom, and it is, or it may be, time to start dollar cost averaging in. Now, did I talk about US Tether? Dominance is still up and extremely bullish. I think this collapses back down. One of the things I see on the horizon for Tether with all the regulation and everything that has come out, and also I read something that US Tether, has withdrawn $10 billion? Yeah, look at this. 10 billion just disappeared. All right. So it seems as if they may be preparing themselves for a real audit here within the next month or so. That makes me very nervous. And when I look at these longer term charts, Bitcoin and Ethereum that point to a downside target of, like, for instance, Bitcoin anywhere from 3,800 to 10,000, and Ethereum anywhere from $100 to $500. There has to be an event that takes us down there. Would a Tether audit be one of those events? Could it be that Tether gets audited and is found not to have the capital or the backing they say they have? I don't know, guys. It's just something to consider. Tether makes me very nervous because they have not been legitimately audited. And so that is why I have chosen to trade in USDC and BTC pairs only. And when I go live, which I'm preparing to do so, actually you guys will know when I start to think we are at a bottom or near a bottom, because I will start to make my trades public and we'll start to go live again. And I'll get ready for at least a short to midterm bull run. And that is what I'm prepping to do. So very soon, guys, I will go live. All right, 1 minute left. Most of you know it is almost impossible to call a bottom. All right. In March of 2020, I did so. But guys, honestly, I attribute that to mostly luck. Yeah, there is some technical skill that you have to have. Nobody can call a bottom. And in fact, if I was to, the instant I gave myself credit for calling that bottom because I'm smart or because I know something nobody else knows, is the instant the market will form a double bottom on us. I've seen that many times. You can never get arrogant in these markets, guys. You can never take credit. It will backfire big time on you. But it is not a bad idea if you are still in the crypto game to start dollar cost averaging in here. Think we are getting very close to a bottom if we have not found one already, at least short to midterm. All right, and depending upon your bias, you would weight your entries accordingly. If you're more bearish and you think we're going further down, then you go light here with the dollar cost averaging in. If you're more bullish, then you go heavy and go lighter as we go down. Always set those stops and watch for my trade alerts. They will be coming out soon. Best of luck, guys. Peace, y'all.